Welcome to the highlights of the 2016 Silverfern Annual Meeting. Today you will have the opportunity to meet some of our portfolio company CEOs, some of our partners, and some of our industry experts who provide a view on current investment trends and the opportunities ahead. You will also learn about our Constant Give Back program, which is the way we have woven philanthropy into our business model.
We are amongst the largest and most successful family office investment clubs in the world, and we invest today on behalf of over 65 of the world's largest and most sophisticated family offices. We're in 23 countries. That's an impressive spread across 5 continents. And when we're investing globally, it makes us local when we are spreading the systemic risk in our portfolio. You cannot, in our view, be a master of all things. You become a jack of all trades. What we do, though, is we bring deep industry and sector expertise into each of our investments through both our advisory board members and also our partners on the deals. We actively originate our own transactions. We select and manage our investments. So we're involved. We're on the board of every company that we invest in. We're not passive. We don't sit there and just hope the world gets better. We are challenging our management teams to do better. We are trying to help them through the connections of our investors and our own team. But now I'm going to introduce Rist Brouwer. Rist is my senior colleague in Europe out of our Amsterdam office, and he will be chatting a little bit about Club Med and taking you forward.
Club Med is a premium global all-inclusive leisure company spread out throughout the world. So now we'll introduce Henri. Bienvenue. Welcome from Paris.
We have today 67 upscale resorts in 26 countries. We have this premium all-inclusive concept for holidays, which is now the only one in the industry to offer an happy upscale experience for holidays of families and couples.
And I'm very happy to be here to introduce conversation around Sequitur Energy Resources, which is an oil and gas exploration and production company led by Scott Josie.
So this is just a quick map to show you where our assets are located. In East Texas, we have roughly 150,000 gross acres. We have a 50% partner, so we have about half of that. This is what you call a fractured carbonate play. In the Permian, the same geologist that discovered the Deadwood field is also the person that came up with the idea in the northern part of the basin. Once prices begin to fall, we just set back. And to just sit and not be able to do anything is very difficult and very frustrating, but it's the right thing to do because you have to figure out we don't know where the market is going because of our track record, and we do work with a number of very large banks. We are also high on their list of companies that they would want to work with as they get problem companies in their portfolios. 18 months ago, no one was selling hardly anything. Then you started seeing people selling things that weren't that attractive. Now you're starting to see some things that are of interest starting to come to market, which is good. And all this stuff is right up our alley.
It's with a great deal of pleasure that I introduce John Campion. Ask him to come up and talk to you about this asset and about this business that he has built.
We build, own and operate power plants. We extend and expand contracts and we get paid. Pretty simple stuff, right? And we do this successfully around the world. In around 2011, we went public, and about 2.5 years ago, I stepped away from the business. And I stepped away from being Chief Executive Officer, and I became the Executive Chairman. When I did that in 2014, the business went from $500 million a year to $236 million a year. The business lost its way. So I spent the majority of my time putting together a transaction. Clive and myself, we had a lot of late night drinks saying, how are we going to fix this business? Because the fundamentals are strong. We took the company private for £1.75. This is the same business that had a market cap and a high price of £11.75 a share. I became Chief Executive Officer again as part of the transaction. So we're driving the business back to where it was. We'll do approximately $120 million of EBITDA. And the object of the exercise is to take this business back to where it was, which is north of $500 million and at about a 40 to 45% EBITDA number. Very achievable. We've been there in the past. It's just a case of getting back.
I'd like to introduce Dr. Peter Linneman. Peter has a unique 40-year background of scholarly achievement and business acumen, and you don't always say that about economists.
So what is out there that's attractive? And my answer is between the raindrops. That is, doing what others don't really want to do. If somebody with a $2 billion fund is doing it, you're not between the raindrops. Looking forward, the real opportunity is as interest rates rise, it's not going to have any notable effect on pricing over a longer term, but it can create dislocation opportunities.
In 2016, Silverfern formed a multi-year partnership with the Harvard Business School. Silverfern's constant giveback provides for a portion of the carried interest attributable to the firm by certain investors to be used to support the work of Harvard Business School, specifically in the areas of women's rights, grassroots education, and in providing need-based scholarships for women.
When the Dean of the Harvard Business School and I met with Clive and Reeta this past fall, he was not only impressed by the philanthropic commitment that Silverfern's making, but also in the way that they are trying to accomplish it. By enveloping philanthropy into the business model, Silverfern is providing dependable funding that is critical to ongoing progress.
Thanks to Silverfern, thanks to Reeta and Clive for the continued support of the work that I'm doing and others are doing at HBS. I feel like we're now sort of on the cutting edge instead of lagging behind when it comes to issues of gender.
We have a contrarian approach. We've always had it, we're going to keep it. We expect increased investment velocity. We believe that we've built out the network. We're going to continue to focus on what we're doing. And importantly, no change in the strategy. We husband this money as our own. We do not have any other approach.